Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So market mostly is waiting for non-farm payrolls release. You can see the mixed performance on the interest rates as well. So after the initial pullback, to the downside on the 10-year yield, market turns to some sideways action. On the gold market, on the intraday charts, you also hardly will find something really valuable for trading on the hourly chart, on the 15-minute chart. We just could make some conclusion on the overall sentiment that stands in the market due to the current situation in general. So taking into consideration the European events, what's going on in the United States directly. So from the technical point of view, we already mentioned that and talked about this, that the fact that market stands above the broken top and flirting around the spike doesn't show any more significant downward pullback. This is definitely a bullish sign. So the consolidation near the top after the breakout of the previous top, this is definitely stands in favor of the bulls. And from that standpoint, and having with this grabber here that suggests actually taking out of this top, it seems that market still has the bullish sentiment. And in general, if you take a look at the events that's going on right now, definitely some capitals out from the Europe will come to United States market, in Great Britain, and of course on the gold market as well. Because currently there's a big uncertainty stands around European economy, what will happen there. As you can see already, some difficulties appears, and it just makes investors nervous, and they are trying to move in safe haven assets. And currently, when the rates are still low, and even consider real rates turning down again, gold still looks really attractive asset, especially with the uncertainty that stands in Europe directly. So from that standpoint, it also suggests that some stable, constant demand for gold should stay on the market. That doesn't let it to show very big pullback here. So that's in general what we could say on the gold. Speaking on the technical situation, so on the daily chart, we have the grabber that suggests taking out of this top, but hardly it will happen today. Probably is because, as you can see, that the verbot stands a bit lower. So it's probably the question of the few sessions. Maybe next week it might be completed. We will see. On the 4-hour time frame chart, not really many things to comment. Yes, market has started upward action from the 1930 that we discussed recently. Here is on the 4-hour time frame chart, we have the minor bullish grabber that also suggests taking out from the top. Short-term background is positive, actually, from the Fed policy as well, just because Jerome Powell said that it will be just 25 points change, which is also the backwind for the gold, is just because initially it was anticipated the 0.5% change is possible. So it's definitely overall situation stands positive. So it suggests that my market should take out of this top, this minor pattern that we have here. If you'll take a look at the market mechanics on the hourly chart, it also becomes evident that short-term bullish setup suggests upward continuation. Why? Because you should just follow to the swings. So you can see extension, contraction, extension to the OP, retracement after OP that has been done, reaction on the OP, and if this bullish context is still valid, that action should become the new extension leg to the XOP. Recently we've got some minor, you can see Washington's, but I wouldn't really count it seriously. It's just because well, it's very small and it was not on the background of something really important. So yesterday we haven't got anything actually except maybe initial claims. So and in general, after the pullback, market stands relatively tight, keeping this upward tendency. So currently today it probably depends on the non-farm payrolls data, especially on inflation that we will get. Keep an eye on the wage inflation, particularly speaking, it calls as hourly earnings. So you can see the big jump in excess of the expectations. Gold market probably will show the upward continuation here. So that's actually what we have currently. Those of you who have taken position yesterday, as we said, with the grabber that have been formed here, if you remember, we talked about this. You just could keep it just most ups to the break even and see what will happen next. For new positions, well, currently probably it makes sense to wait and see, just because today and Friday, and maybe it makes sense to wait what will happen on farm pros release and then make some decision, because currently, well, you will take the whole risk of the report, and if you're ready for that, you could try, but I'm a bit conservative from that standpoint, and I prefer, if I have missed the entry at some predefined level, I try to not take the position before the important events. So that's our view on the gold market.